I mean, my first question is off the back of you getting regulatory approval. So congratulations for that in November, for getting that. And you're starting with unregulated lending in the first half of this year, namely in the bridging and commercial property space. Why have you decided to start with that type of finance?
Okay, well, firstly, really appreciate the opportunity, Beth. Great to speak to you. Back in the early part of 2018, we saw a big service gap for SMEs generally. You know, we've seen since the last financial crisis the denuding of skills, the lack of relationships, the lack of accessibility, and rather depressingly, forced migration to call centres. And you know, if you take a step back for a minute, this SME segment is the backbone of our economy. It's 52% of gross domestic product, and it has 16 million people employed in it, by far and away the biggest employment category. So we looked at those service gaps where we felt most acute. From a debt quantum perspective, it felt most acute between £100,000 and 5 million. But also we saw a lot of gaps in that secured lending space. So we identified 4 initial products. So as you rightly say, we got our authorisation with restriction in the middle of November, and we launched pretty well, certainly by the end of November, we launched a commercial real estate product for investment and owner-occupier. We launched bridging loans, and I'm sure we'll talk about those more. We launched working capital, which was VAT, corporation tax and professional indemnity, very short-term loans. And we launched professional practice loans, which is the equity buying side of things, slightly longer term. And then in our longer term roadmap, once we remove our deposit restriction, and I'm pleased to say we're on track for that to happen in Q2, we'll launch our professional buy-to-let product. It's all ready to go. And in the early part of 22, we'll launch an asset finance product. So I suppose if you look propositionally, what we wanted to do was address time poor entrepreneurs lacking relationship, give them blended credit, give them single point of entry. And we identified those areas. Whilst bridging served very well, and as I say, I'm sure we'll talk about it, what we saw was an opportunity around what I would call quirky, slightly non-standard, requiring some structuring, requiring some work. So dead simple example, a client that we serve with a bridging loan, they'd sold an asset to a REIT with deferred consideration. That's a tough old one to underwrite unless you've got that enhanced level of skill set. We were able to unlock 7 figures on that sort of deal, but that wouldn't be a typical deal you'd expect to see going through a typical bridger. So I think we're not trying to compete with very, very competent people like MFS on day to day. I think we're trying to add value where it's relationship led and it's slightly quirky, it needs structure, it needs a bit of intellect to make it work.
That definitely clears up exactly where you're lending and what gaps you're looking to fill this year. As you rightly said, I'm definitely interested to know a bit more about the bridging offering. So you launched the product end of November. I think you said. How much business in the bridging market have you done since November in terms of inquiries and completions?
Well, the first thing is, I think it's symptomatic of the dislocated market. As a new entrant, bear in mind we're in soft launch. You know, the soft launch means that we haven't yet removed the deposit restriction, so we're lending our capital. So this was really a soft launch that allowed us to build broker relationships, some that we've had an awful long time, reacquaint ourselves with some of our brokers for many years. But in terms of inbound flow, in that short period of time, it's actually exceeded £250 million, which is far in excess of anything that we anticipated. And that's spread, in fairness, across those products. But there's a bias, there's an undoubted bias towards commercial real estate. There's no argument about that. In the soft launch, we set ourselves a goal by the end of our financial year, which is March 21, to have loan assets of £20 million, which is actually setting quite a pace, because most of our competitors, when they get their interim license, they don't lend for very many months because they're building up their IT as is all built. So probably the period between now and then isn't that illustrative. So if I tell you the period to March 22, the new financial year, where we have a proper run at it, so to speak, we'll be looking to underwrite around £250 million of new loans, which will be spread across all those lines. Bridging's a very key one. We'd expect bridging to be maybe circa 10% of our book, something like that. It'll be important, but it will be the dominance will be commercial real estate and the professional buy-to-let when that comes on stream too.
And the third of £1 billion, that was inquiry figures. Is that correct?
That's correct. That's inquiries, and frankly, it was far in excess of anything that we expected. But what does that tell me? It tells me that there's a constriction of supply, not necessarily very liquid. You've got some great players like MFS and Octane. You've got some very, very competent players there. But I do think that there are certain secured loan markets that are constrained in terms of supply of credit. And what we found, again, which we slightly didn't expect, was the quality of the borrower. There were bigger ticket sizes. There were bigger businesses with stronger balance sheets. So all that bodes well, really. That's all positive news for us. We were not expecting, as a new bank entering the market, you do tend to find brokers, blow the dust off deals and say, well, have a look at that one. But thankfully, our experience has been somewhat better than that.
There's some brilliant figures that you've mentioned there, and you've noted that the dominance will be in the commercial real estate market. Do you think that's why you're seeing such a big such big demand for Recognise? How are you hoping to take market share in the commercial space?
Well, one of the things for us, if you look at our proposition, we firmly believe that there is an opportunity to get best-in-class IT, which I think is key to service clients with a really great customer experience, with omni-channel access. So you create convenience, you create access, but you have to blend it with relationship. We're firmly in the camp. 72% of SMEs that we surveyed, over 400 of them, said, at points in my business cycle, I want face-to-face contact. That's really important. So what we've tried to do is what we call digitally enabled relationship banking. It's taking IT, but also having a name contact, direct access, not going through call centres or goodness knows what else. So you build up a relationship, they understand you, they understand your business, and you can pick up the phone and you can get a reasonably speedy turnaround. One of the great things about our platform and our process, I did a commercial real estate transaction. It was £4 million. It went to credit committee. It actually came in after 5 o'clock on the 16th of December. It went into our credit committee on Christmas Eve. So we had the Christmas period to work through as well. But we drew that deal on the 21st of January. Now, most bridges are happy with that, never mind a commercial real estate. And bear in mind that most of our big competitors will take 4 to 6 months to do a deal like that. And we're doing it in effectively less than a month if you strip out some of the Christmas holiday. So speed of execution, intimacy relationship, building continuity, having high levels of respect for our clients. They're very time poor and we want to give them a great service. And in the context of property investment, as you'll know, these clients tend to be quite acquisitive and they'll acquire a number of assets. They might flip them, in the bridging space, for example. It's not unusual for them to acquire, maybe do like refurb and flip, or it may be PD. There's a whole host of different things they can do. But generally speaking, they're looking for continuity, they're looking for a relationship. And what, I see it as bringing back some of the traditional relationship banking that we saw maybe 2 or 3 decades ago, that's kind of gone a little bit. But you give people dedication, respect, responsiveness, and creativity. And I think with a good technology platform as well, I think that's going to be quite a powerful combination.
You've with regard to the commercial property market, obviously there's been quite a lot of gaps in that sector in terms of lending products and lenders being able to get comfortable with the risks that's associated with it in an uncertain environment. How does Recognise get comfortable with the risks that are in that space?
Yeah, well, the thing about commercial properties, there's a lot, as you rightly said, there's a lot of diversity in there. So certainly during the pandemic, we've seen certain parts of it suffer quite badly. High street retail is difficult. Office blocks in city centres is quite difficult. If you were to jump to the warehouse logistics sector, that's having a while of a time at the moment because of online, and there's a big demand, and the asset values are quite strong. So you've got a plethora of different asset classes with different profiles. We pay a lot of attention. We have 2 property advisory panels where we keep very, very close to what's happening in terms of primary, secondary and tertiary property values, the different subsets within that category. Generally speaking, because our maximum loan is up to £5 million, we're not really hit with some of the more complex transactions, where we've seen some of our peers having difficult disclosures on bad debts and various things in the not too distant past. So we tend to be, the sponsors, the borrowers tend to be a little bit smaller. It's a little bit more intimate. Relationships more important. But we're quite bullish about commercial real estate in the long term post Brexit. We've seen what's happened in the foreign exchange markets. We've seen what's happened. Certainly, when I speak to PE houses and other investors, they're actually really quite bullish about the prospects for the UK. There's always turbulence and issues with Brexit, and obviously the pandemic wows us. But if you look at the medium to long-term business case, I actually think people are quite bullish about the opportunities for the whole of the UK. And whether it's London or the regions, and we kind of share that. We feel that the real estate space generally is going to be very robust.
And you obviously mentioned earlier about the when you're soon to be launching your savings products, and that'll be to personal customers and business customers later in the year. How will this change the pricing on your bridging and commercial real estate investment products?
Well, what we've tried to do at the very outset, you anticipate your funding mix will change, but if you take bridging market, for example, I think I've never seen the bridging market so price competitive as it is now. I'm seeing regularly different players in that space pitching terms at 48 bips, 50 bips, 55 bips a month. And that tends to be for resi, where there's a very strong secondary liquid market. So for us, unless we can genuinely add value in sectors, if they're really well served and there's a lot of competent players there, another me too doesn't really add value. So we try to pick subsets in that market where we can genuinely add value. But right from the off, we've set our prices at a level where we feel they offer good value for money. But we're integrating not just, we don't want to be a commoditized offering. We want to add real value. We want to build relationships. We want to, I think my experience now, I ran the RBS network. I built Metro Bank from scratch in terms of its loan book and its deposits pre-stock market flow. So I've seen enough experience over the years that if I do build relationship and I offer good value for money, I'm not always the cheapest and I don't profess to always be the cheapest, but if I'm consistently in the market, consistently adding value, and I'm accessible and I'm responsive and I can close deals with a level of certainty, people really value that. And that's our model. We want to be by their side, to quote another one of our competitors. We want to be there adding value. We really do.
A lot of that, relationship building is I assume going to be around the regional focus that you've got. How will that USP differ to other specialists and challenger banks offering this type of specialist finance?
Well, I suppose the interesting thing, everybody's got different models, so you've got to be very careful about being too generic about it. But the interesting thing when you look at specialist finance is that a lot of that distribution is centralized. And they've been very successful. That model does work. But if you really are passionate about relationships and accessibility, you have to have a model where you're close, you're community based, regionally, where you know what's going on in the community, you add value to the community, you can go out to see your client. I'm firmly of the belief that you should be serving clients within a 40-mile drive time, because if I'm sitting in, I don't know, if I'm sitting in London and I've got a client in Preston, it's not particularly efficient or sensible. I need to have hubs and clusters of concentrations of clients where I can add real value. And there is face-to-face. It doesn't always have to be face-to-face. And one of the things I'm continuing to learn, one of the things that we've successfully integrated is things like, Teams and Zoom and WebEx and various other things. We can blend, it's about relationship. It doesn't always have to be face-to-face, but it's about regularity. It's about added value. It's giving the client the psychological comfort to knowing that we're there when they need us and we'll always be there. So when you look at the hub strategy, just answering your question, Beth, we're starting off in London and we've also got regional hubs in Manchester. That's our second biggest hub now. We've got a smaller hub in Leeds and we open our hub in Birmingham post the pandemic. So very soon. And we've also got our operations team based in the Midlands, in Birmingham. But then looking slightly further out, those centres are where there's real economic growth and vibrancy. And you look into 22 and we're looking at Bristol, we're looking at East Midlands, we're looking at Milton Keynes, we're looking at Newcastle, and we'll continue to build a distribution where we can serve a region with intimacy and access and responsiveness. That's so key. And I think one of the things most of our competitors don't do it because it's kind of difficult and you have to work through the economics of it. And unless you have a cutting edge cloud-based technology platform, it's very difficult to make your cost to income ratio work. So we think we've bought a really interesting blend of IT and relationship. And we know that's what clients want. Clients want that. It's whether, the big banks, frankly, have just given up and just forced them to call centres. And we think there's great opportunities. And bridging, very fast moving, all about speed of execution. But again, we've already done bridging loans in less than a week, end to end. And we're doing commercial real estate loans in less than a month. So we're not doing it at the expense of speed. We're doing it, we want a rich relationship, but we also want certainty of outcome for the client. And indeed our brokers are so key in this. And they're over my banking career, the commercial broker channel has become massively more important. Days gone by, when I first started in 1995, there were relatively few and far between. Then, I got involved with the National Association of Commercial Finance Brokers in 1993. I was the first bank commercial patron for Royal Bank of Scotland. So I've worked with those guys 27 years. And then FIBA with Adam Tyler now there. And the broker channel is so important. And but there are so many real quality commercial finance brokers now serving that bridging and that secured lending space, because most of the big banks don't have distribution anymore. They don't have anybody that can talk to you about it. You walk into a branch of one of the big banks and say, I'd like to talk about a commercial mortgage. They'll think you've come from like another planet or something. It's all double Dutch now. The world's moved on. So our mission is to serve our clients and give them a great service.
You've obviously mentioned there that the importance of brokers in this space and to you as a bank. How will you be looking to widen your distribution this year?
Well, the broker channel is by far and away the most important channel, and there's no question about that. And we've already, in the short space of time we've been up and running, started transacting with 40 brokers. But as you know, that's a a drop in the ocean. NICFB have got over 1,850 brokers. FIBA, I'm very impressed with what Adam's doing with FIBA. That's really got momentum, as well as all the good work that Norman Chambers is doing in the NICFB. So we see the broker channel being critically important to us. But what we want is dexterity in our distribution. We've got our business development teams in our hubs. We've got black books. Goodness knows, if you've been in the industry 35 years as long as me, you know most people now, and we can trade with them, and people come to me already because the bank's up and running. It's fantastic. But equally, our professional connections, some of our affinity groups, there's a broad diversity. So brokers front and center. That commercial intermediary market is so important, but so is a diversity of distribution. So you'll continue to see us building those hubs, getting close to clients, getting close to networks with professionals, lawyers, and other key professionals in those communities. So it's a mixture of all the things, but brokers will always be very important to us, and they continue to be.
I'm sure they'll be pleased to hear that. And finally, how do you feel that the pandemic has potentially changed your plans as a bank from your original journey that started back in 2018?
Well, and in some respects, it's slightly upsetting in a way, because nobody takes any great pleasure in seeing the destructive force of the pandemic. It's the equivalent of the economy having a heart attack. It has been a cataclysmic event for the economy. And I'm really sorry about that. Genuinely, I take zero pleasure in that. But then if you step back and look at a new bank with no legacy book, no delinquency that the incumbent banks and other lenders have, we look at this market with a relatively fresh pair of eyes. We're ambitious. We want to add lots of value to our clients. So hopefully we can make a real difference. We want to be supported. We know how critical this next stage is. Such a critical stage. The government's done a very, very good job. But when you start gearing your business back up, working capital's so key. You started from nothing. You're bringing people back in. You're bringing fixed costs in. But what volumes are you going to have? What the demand look like? It's a tricky period for a lot of businesses, transitioning from furlough into live trading again, and we're too small at the moment to make a massive impact. I'm realistic enough to realize that, but we're talking about helping ambitious businesses step by step, each time helping prosperity, helping the local economies, helping job creation, and we genuinely feel passionate about the positive difference we can make to small businesses and how that benefits the economy and the communities and people's livelihoods. So, as much as we can, we want to add value. And post that pandemic, I personally think the second half of the year, it seems to be shaping up to getting into a better, more vibrant economic growth pattern. And we'll launch our savings proposition in Q2, and we'll be primed and ready to do as much as we can to add value to the small businesses communities that we serve.